Welcome to Personal Finance Deep Dives, where we help you make your money work for you. Today, we're going to demystify the stock market. We're giving you the playbook you need to start your investing journey with some real confidence.
Let's dive right in with this quote from the legendary investor Benjamin Graham. This, right here, perfectly frames the biggest challenge in investing. And surprise, it's not the market, it's our own human nature. The real battle is what's happening inside our own heads.
So first things first, what even is a stock? Well, think of it like this. It's a tiny slice of ownership in a company. When you buy a share of, say, Apple or Walmart, you're not just a customer anymore. Nope. You actually become a part owner, and you have a stake in that company's future. And you should know that stocks basically come in two main flavors. You've got common stock, that's what most people buy, and it gives you voting rights. Then there's preferred stock. You usually give up the voting rights, but you get a pretty nice perk. You're first in line for dividend payments.
Honestly, understanding what a stock is, that's the easy part. The hard part is steering clear of these emotional traps. I mean, who hasn't felt that pit in their stomach when the market takes a dive? Or that fear of missing out? You know, FOMO, when some stock is shooting to the moon. Acting on those feelings is what gets most investors into trouble.
And that brings us to takeaway number 1. Your emotions are your biggest risk. Seriously, success in this game isn't about being a genius, it's about being disciplined. If you can master your emotions, you're already way ahead of the pack.
Okay, so how do you actually manage that risk and keep your emotions in check? Well, the first part of your game plan is a super powerful strategy called diversification. You've all heard the old saying, don't put all your eggs in one basket. Well, in the world of investing, that's the absolute golden rule. And look, building a diversified portfolio isn't some complex mystery. It's a pretty straightforward three-step process. First, you decide on your asset allocation. That's just your mix of things like stocks and bonds. Then, you diversify within those categories. And finally, you just rebalance every so often to make sure you're staying on track.
For example, a really common starting point for a lot of investors is a simple 60-40 split. You get the growth potential from the stocks, but it's balanced out by the stability you get from bonds. It's a mix that can help cushion your portfolio when the market gets a little wild.
So, the crucial point here brings us to takeaway number 2. Build a diversified portfolio to manage your risk. Just think of it as your best defense. It's what keeps one bad investment from sinking your entire ship.
Now, let's move on to the second part of our game plan, which is really all about your mindset. This quote, it might be one of the most important things you'll ever learn about investing. Trying to time the market perfectly, buying at the absolute low and selling at the absolute high, it's a fool's errand. It just doesn't work.
And this chart shows you exactly why that principle is so powerful. Yeah, short-term market swings are scary. I get it. But when you zoom out, you see the incredible power of long-term growth. Assuming an average return, that initial investment just grows and grows exponentially. That's the magic of compounding at work.
And that brings us to takeaway number 3. Think in decades, not days. Your greatest ally as an investor isn't some hot stock tip from a friend. It's time. You have to let the power of compounding do the heavy lifting for you. Which all leads to our final, critical point. And that brings us to takeaway number 4. Invest consistently. You don't need some huge pile of cash to get started. Making small, regular investments is one of the most proven ways to build some serious wealth over the long haul. All right, let's do a quick recap of the playbook. First, and this is the big one, master your emotions. Your discipline, not your genius, is what's going to get you across the finish line. Second, diversify your investments. Remember, don't put all your eggs in one basket. It is your absolute best defense against those crazy market swings. Third, play the long game. Think in decades, not days. Just let compound interest work its magic for you. And finally, number 4, invest consistently. Building wealth is a marathon, not a sprint. Those small, regular contributions, they really do add up to huge results over time.
That's all for now, folks. Please like, share, and subscribe for more like this.